if you run a profitable business, these two numbers represent the difference between what most business owners are doing and what's actually available to them in 2026. So the $72,000 number, that's roughly what a SEP-IRA or a solo 401k gets you this year. All right. Now it's a real deduction in a real account. Okay. But if you're running a very profitable business, that's your ceiling. All right. Um, and so the $350,000 number, now that's closer to what's possible when you combine a cash balance plan with a 401k plan. Okay. Same year, same business. All right. So let me show you what what that looks like by age or a few ages using 2026 contribution limits, okay? So at age 35, combining a cash balance plan with a 401k gets you to around 165,000, okay? Now compare that to a standalone SEP IRA or solo 401k of 72,000. Now I did a previous video where I gave the standalone cash balance numbers, but when you combine the two, as I said in that video, they become the number becomes even more substantial and it's more powerful of a number. So as you can see here, the 165,000 as compared to a just having a SEP IRA, a solo 401k, you're capped out at 72,000, right? Now look at 45, okay? That number climbs to roughly 226,000, all right? And then at age 55, with catch-up contributions included, all right, you're looking at around 333,000 in a single year. All of it pre-tax, all of it reducing your taxable income dollar for dollar, all right? Now, this is very common. A business owner is doing everything right. They're maxing out their SEP IRA or their solo 401k every year, and they're not realizing there's an entirely different level available to them. Okay. But they're thinking, what else can I be doing? Okay. Now, let's put some real numbers to this at the 37% federal tax bracket. Okay. And I welcome you. I welcome you to revisit the other video I did where it was just standalone cash balance numbers, so you can see the difference in the taxes saved when you combine it with a 401k plan. Okay, so now at age 35 here, if you're contributing that 165,000, okay, it saves you roughly $61,000 a year in federal taxes. Okay, and we're just talking about federal taxes here. All right. Now at 45, if you're contributing the 226,000, that saves you around 84,000. Okay. And then at 55, it saves you close to, well, if you're contributing the 333,000, it saves you close to the as close to 123,000 in federal taxes. All right. Now this is every single year. Okay. So again, do the math and spread this across 5 to 10 years, and the numbers in tax savings are quite large. Okay. Now, what I want to mention here is these are estimates. Okay. Your exact number really depends on your age, your income, and how the enrolled actuary structures the plan. Okay. And again, if to get familiar with the enrolled actuary, I'll be putting together a video just to introduce the parties that are involved in putting together a cash balance plan. The enrolled actuary being a very important team member. Okay. Now the cash balance plan alone is already powerful. All right, but when you combine it with a 401k, that's where the numbers really move. Okay. So now the account can be complicated. But it's really, like I say, the coordination is what people are missing. Okay, and that's exactly what the right system really handles for someone. Okay, is having a good system in place that will help you with the coordination and keep things on track. All right. Now, if this relates to you, all right, so if you're a highly profitable business owner and you want to know what your combined number actually looks like. All right, you can book a 20-minute virtual with me directly. Link is in the description here. You can also go to our website, zenfp.com. There's a link on the website as well. All right. But until next time, folks.